Right, so this is part 2 of the Indian market review for 25th November. And in this is Dr. Musa on the session, and we also have Ramesh and Sudeep online during the live session. So moving forward from what we discussed in part 1 about a certain set of sectors which are clearly bullish and other ones which are probably good shorts, and that over the last 2-3 weeks, that mix of what's long, what is good to go long on, what's good to go short on has clearly shifted and changed. We'll now jump in and look at individual stocks. So not going to cover everything, of course, but some key ones, and we'll start off for the strongest long ones were clearly the IT sector had a very strong, big, nice green candle, right? And the rupee depreciation makes the IT sector more profitable and also more competitive in the global market. And if the rupee continues, if it falls further, then well, it's good for the IT guys. Right? So looking at how the IT stocks might be panning out, not in any particular order. Let's start with TCS. So of course, one of the things about TCS is this ongoing tussle between Ratan Tata and Mistry. So anyhow, leaving that aside, TCS has just about the exact picture in terms of the IT index and this, almost a mirror image. What you can also see here, however, is a fantastic increase in volume yesterday and today, and also this very strong volume on this particular day, right? So that was what was that, 15th, and we had that day when this doji happened, went down, came up, very good volume, and then after that didn't come down, and then we got this big nice move. Looks like a Elliott wave 3, and could perhaps go much higher to about 2430. Clearly, this is a long, and it's also interesting that it's come off from the 2014 support levels. For those of us who have watched the, have moved to weekly now. For those of us who watched the fundamental review, remember we kept saying that IT was getting definitely attractive to buy, and should we not, and that was about, I think, a few months back, right? Yeah. So this is a amazing recovery on TCS, and sticking my neck out to say buy. Sell is only really below 2050 or anything. If it comes down, and it could to say 21 or 2150, we should continue to buy it. Short term sell could be at around 2400, 2450, but if things continue, this could go back to 2750 or even higher. Then coming to Infi, wow, so this one didn't really do a cup saucer pattern the way it was there in TCS, but I guess just went up with the rest of the pack. Very clearly there's a difference between the way Infi is behaving and the way TCS is behaving. And to point out, just to go back to, just observe this part here. You can follow my cursor. The volume picture and the price picture in the last, say, 10 days. This turning around and this volume here, if you look at TCS, that's certainly more encouraging and stronger, more participative turnaround in a base formation than Infi is. Infi might have just gone up with sentiment. Right? There seems to be some more substance as far as TCS is concerned. Wipro also showing more substance. This is really good. And wow, I mean, sometimes you don't do things for 2 weeks and there's so much that is there. There's clearly a great bullish divergence which is there, very, very significant, though it's not showing up on the weekly chart, right? And look at the MACD here and look at the MACD here, and it's quite strong. Okay, so Wipro also doing well, and this I think could go to 490, maybe cool off after that, and then head to 500, 510, maybe cool off after that again, and then after 525 will be the next move as far as Wipro is concerned. HCL Tech, all right, so that's clearly something that had not fallen. Good support around 745, 750, and today it's spiked up. I mean, uh, clearly an unusual, or I don't know what really motivated it. I can only think about the dollar. Uh, there is a lag in video. Okay, and time then. If I just slow down my.
Yeah, still I'm seeing the TCS screen actually. It's not,
Oh, no, then it's not a lag.
maybe uh, maybe I can.
Sudeep, what about you? Are
The
you
first part also the first part also a little bit this thing was there. Now I got HL Tech now.
okay? One sec. Just tell me once it changes, what do you see now?
HL Tech daily.
No, no.
Now XRA daily.
Okay. Now,
HL Tech daily.
okay. I think it's okay now.
Yeah.
Okay.
Now it's
I'll say it, and then if there is again a lag, just interrupt me. No problem. Okay. All right. All right. So you should be seeing HCL Tech now, and that had clearly not fallen. And one of the things I'd mentioned about HCL Tech, if you remember in the earlier IMRs, is that this one had actually fallen a lot, unlike TCS or Infi. They already fallen a lot much earlier, or in April of this year, from 1040 to 700 almost. And then, after the demonetization and Trump and all, it really didn't go down in the way that the others did, and sort of showing relative outperformance now. And this one is HCL Tech is clearly above the 200-day moving average, which the others are not, and this is that therefore quite a good buy. And also attempting to break out above 800. If I go to weekly chart on HCL Tech, you can clearly see that the downtrend was broken about 2-3 months back, unlike for the other majors. And there was a tentative uptrend, which higher top is not yet there, but the higher bottom is clearly in place as far as HCL Tech is concerned. So definitely a good buy. 840 would be the first resistance, and then we'll review, and perhaps this will go up much faster than maybe the frontline IT stocks. Uh, you should be looking at Tech Mahindra now. Okay, and just confirm that you can see Tech Mahindra. Okay, you can put it in the chat box. So this one has definitely done extremely well. Okay. More than anything else, there's a clear double bottom which has been put in place. The stock was just 400 early November or 410, and now it is 500, almost 25% up move in about a month, and nothing. This is really good. Right? There's no doubt about this. This is perhaps on its way to much higher levels. Volumes are clearly there, and the stock is being accumulated. And I suspect, okay, okay, so Tech Mahindra, definitely a good buy. And by the looks of the volume, I suspect something is cooking in that stock. And once it breaks 500, 540, 560 quite easily, and I think just a matter of
there are. There was a news it is totally on telecom sector. Tech Mahindra's exposure is. So telecom sector is coming off the ground. So I saw that news. It's a bullish thing for Tech Mahindra.
Okay. But any more details? I mean, how is it beneficial to Tech Mahindra?
They are more, they have more deals in this thing, British Telecom and all.
Okay.
Telecom sector is started like it was down. Now it is improving actually.
You are talking about
So that is the
globally, is
reason.
it? Globally.
Yeah, globally, yeah.
Oh, okay, fine. All right. Great.
They have more exposure to this British Telecom actually.
Okay. Okay. All right. Okay, fine. So that's good to know. And all right. So let me just check something here. This stock low is 407.4. This low is 405. This one is 405. All right. So I was just wondering whether we have some wave one, wave two of immediate wave. But yeah, since we've not done it, we'll do that later. Okay, so definitely, I mean, going through the IT, the smaller ones seem to be doing better than the frontline ones. I'm moving to Hexaware now. So just confirm that you can see Hexaware, and that's also really, really, done well. Okay, we haven't obviously done too many studies on this. So let me put in some lines, and hopefully it's coming up at your side. If you're not seeing Hexaware, please let me know. So that's the life high. Generally, that's how I like to mark it with the bold green line. That's my way of marking it. It's my reference. Feel free to adopt it if it's useful, or just do whatever works for you. Okay. All right. So you can see there was some, a top there. April 2014 took off from there, and what's important is that it's been having some good volume days about a month back, and even yesterday and today. And sentimental going up, but I doubt whether it's coming back below 180, 175 unless the entire market breaks down. This is also looking good. All right, so that's for Hexaware. Once it breaks 204, 205, especially 215, it could, for all you know, maybe in a few months be at 270. That is distinctly possible. Mindtree, hi. So you should be able to see Mindtree now. I hope you can. Mindtree hasn't shot off like all the other IT stocks. That's strange. You're wondering what's keeping it down and not able to really move up. Maybe it'll do that on Monday or Tuesday. 450, 475, 500 is where the critical resistance is, and once 500 breaks, then 600 or even 700 could be a distinct possibility. What's this? Right, so I'm going to put another support line. And just look at that. So I just using this bottom of the last month as a reference point, and you had similar levels in 2014, Jan and March. So the only problem is you will never for sure know which support is going to hold, but something eventually does, and that's just the point to know. Okay, so one interesting thing here on a very big picture. Let me see if I can demonstrate that. Okay. So what you see is a very, very large rounding top pattern, which took from 2014 to 2016, a good 2 years to make. And there are some important levels here. So you've got this level where it clearly broke down from, okay, and then there is, in some sense, somebody could say that there's an even bigger rounding top, from 400 to 800 to now. The, what do you say, the absurdity of that is, if the measuring implication has to be met, the stock has to go to zero. So this sort of rounding top is perhaps not to be traded, or I mean the larger one. I'm talking about this. Right. So possible that the fall has now stopped, but I think you've seen better technical setups in some of the other IT stocks, so would not be too much of a hurry to buy Hexaware and Mindtree. Looking at OFSS, Oracle Financial Services. So wow, something definitely happened today in OFSS. This is massive, massive volumes. Fantastic volumes in the last 3 days, including today. Something very curious going on in this stock. So first, a lot of selling, as you can see, late October onwards, which continued for almost a good month, and then suddenly the selling stopped. It came to a halt, and then there's again massive buying that's happening again. So wondering, what operator-driven insider trading? Is there something? Somebody knows that's for sure, and taking these stocks up, right? So this one is definitely a good buy. 2,800 is a good stop loss. May correct back to 292850. The critical level to cross will be 32, 3,200, and then it'll probably be maybe a slow progress all the way to 3435, and then we'll review that. Right? So good one. Actually, if you look at all the IT stocks again, just to get the point across, I don't know if any of you are, but I think based on what I'm seeing here, would be a very good idea to track the charts every day, even if you're not fully versed with the jargon, and observe how they turn around. Because I'm saying every day now, because usually I don't, because there's a lot of activity, happening globally, locally, now on the foreign exchange side. So you will be able to make the connection. So if you just read the, say, headlines of business papers along with whatever is happening on the charts, you should be able to connect a lot of stuff together. Okay, so this is IT, and well, everything is a buy, and some are better than others, right? I think the other one I want to focus on, hopefully haven't missed too much of action in it, is the Realty side. That is what was looking really good, but not too many in the Realty side as far as the FNO side is concerned. It's just a mix. Start with DLF, of course. That's the big daddy of Realty. So this is a weekly chart of DLF. What is very clear is that the longer term downtrend, which is, let's say, actually marked from here, from 2010, but for all practical purposes started from that, is really not yet over. Okay, it's really not yet over, and that downtrend is still in place very much. What happened, you can see very clearly, is that it hit that downtrend line and the 200-day moving average, and then has come off, and it's really broken down. The fall has slowed at around, say, about 105. It seems to have found some support. I've switched to daily chart. This is a big gap. in the chart, which is partially closed, not fully closed. And then there is some sort of base formation that's happened for the last 2 weeks. I think definitive might be a good opportunity actually. So in a sense, a pretty vague head and shoulder bottom. Left shoulder, head, right shoulder not yet over. Let's look at volumes. Okay, there's something you're clearly seeing. This is as good as it gets in terms of textbook stuff. So selling with high volumes, right here and all, and then you got some buying, and the volumes were not, I would say pretty good. Then selling again, good volume buying on the head as up move, and you have the least selling at this point on the left shoulder down move. And we see, maybe on Monday, Tuesday, a good move, and maybe this will, in anticipation of perhaps interest rate cut or something, then easily it will move above, 115, and who knows, we get to 135, 140 very quickly after that, right? So that is something which is quite interesting. And then after that, in the longer term, just keep this in mind as far as this is concerned. I'm just going to, where is that extend right symbol? There is something attached. Okay, let's not waste time. Just extending this into the future because that's going to be a reference point for us at some point. So, when it comes back up, we'll observe how it reacts at that time to get a better idea of what do we say? Whether there's further upside available or it might stop there, and that will be a good place for potential profit booking. But for now, if you are one of those aggressive type punters, folks, you could get in. It will be premature because the head and shoulder is not broken, with a very clear stop loss below 102. And then if once it breaks that level at around 115 and then 120, it could very quickly go to 130, 140. So you're talking almost about 10 to 30, 25% up move on this in terms of HDIL. Unitech no longer in, don't even know why it's in my list. I'm going to skip this. Even JP, okay. All right, so if you noticed, I had written this impending breakdown. It's not a chart I think most of us would have seen on the IMRs, but I'd written this impending breakdown sometime in, I think June or July, right, saying that it would, and it didn't in the beginning, and then just shot back up, and after that went almost close to the resistance and then has turned back, and then the breakdown has happened a good 2 quarters later than was anticipated. But just wanted to point out something that was done 6 months back, and sometimes it comes true. You should never completely give up on your view, especially if you have some really good, strong technical or fundamental reasons to have a particular view. You should never give it up just because market does something else. Sometimes the market takes time. I mean, not just the market, life takes time. A lot of times life just takes time to do what you're quite sure it will do. And it's just a question of, I don't know, it's a delicate balance between having faith and being foolish, I think. So this is, well, just an illustration of that. To move into the volume side. So, interesting, right? So you can see clearly a lot of volume happened in September, October, November. Okay, or rather September, October on the upside. Very little selling happened in October, November, and then it picked up of late and hasn't really settled down, I would say. So there was some either institutional or promoter driven buying 2 months back. Okay, I'm hesitating because tempted to say buy, but there's no technical reason to buy it. So just watch the 180 mark, and if the sector does well, then you could get into these. NCC, Nagarjuna Construction, similar story. There was some very large deal here on high volumes about mid-October, and then that just sort of went off because of fall in the entire sector and the market and all that. Now there is clearly a recovery happening. There is a strong sort of hammer here, no confirmation, but the important thing is that it's not gone back to these lows, and that low is at 70 rupees 80 paisa. It has not gone back there, and given the current chart picture, unlikely to go back there. So this could be tentatively speaking a good place to buy. This has, in my opinion, broken the downtrend. You don't have a higher top right now, but I think just a matter of time that it comes. So NCC, Nagarjuna Constructions could be bought. You will have a lot of resistances at 80, 82 until it clears 85. But once it clears 85, that will be a breakout after 2 years. And in a sense, if you look at it from a long-term perspective, this has been range bound. I've switched to weekly. Right. So if you look at it from a really long-term perspective, for 2 years, this has been range bound, and once it clears that 100 rupee zone, the stock is probably headed to much higher levels. Yeah, so this is next resistance at around 120, and then we'll review after that. Okay. Very slow, long, multi-year consolidation is how I think I would look at this at. And remember, this was a 10 rupee stock. 10 rupee has gone to 110. A lot of lessons. So just to drive home some lessons, this was a, let's say even here 20 paisa stock in 2000 and became a 200 rupee stock, which is like 1,000 bagger, and then from there became 10 rupees. From 200 plus became 10 rupees. What a destruction in wealth. And then from its lows of 10, it has now 80, 90. That's an 8 bagger. So well, of course, this has happened over 16 years, 1.5 decades, but just showing because and look at this 10 rupee, how this psychological number 1996 somehow never broke through that, and then I mean after about 15, 16 years took support there and has gone up. So multi-year, long-term old supports and resistances should never be forgotten, and this is a good one to illustrate why it is so important to track, have history as long back as possible, and to what do you say not compromise on your data and your studies. Once in a way, for all the charts that you look at, you must look back as much as history as in from the listing day onwards. Okay, so anyhow, NCC, like I said, potentially good buy, and you could look at getting it in HDIL. So this has come to a good support, right? So I hope you're seeing HDIL on your side. Let me just take the full picture. of HDIL. So that's from 2008 from onwards. This was 1,000 rupee stock. It is now at around 58, 60 rupees. This is going through 1, 2, 3, 4 years of consolidation, sideways movement, right? Okay, let's look at volumes. Okay, what's clearly interesting is if you observe from this side, fantastic volumes, right? Massive buying happened in 2014. Stock went from 40 to 100, and then nothing much happened. It went down. There wasn't much volume on the selling side, and then it just shot up again with massive volumes buying, and then again the selling side here, not much volumes, consolidated on low volumes for almost 6 to 9 months, went up again on volumes, and then has come down on low volumes, and then the selling recently, I would suspect, happened just because of all the demonetization, etc. It's just a sort of sentimental thing, unless there's something, of course. I don't track the fundamentals, but there could be some news there. And it has come to, I've moved to daily chart now, and it has come to a good support level. And this support is from 2015 onwards, 2014 onwards, 2012 onwards. You can see the many times that this has, it sat there, 1, 2, 3 in a sense, 4, 4, 5, 6, and then now there. Of course, the moot question is, does it break or does it hold? There's no way to know for sure. But given what else is happening in the realty infra space, it's a chance worth taking is how I'll put it. Buying it at good support, low risk, definitely exit if it breaks 53.20, and that's almost about 10%. But if it does go up, easily 70 or 75 is a distinct possibility, along with the closure of this window there, right, which is also again partially closed, not fully. So good risk reward setup on HDIL. Okay, so that was about infra and realty. So I think of all the ones, HDIL and DLF probably look the ones to buy. Okay, so to keep a balance, let's look at the shorts, and I think we look at of course the banks. Let's look at the banks. I mean, we should look at the banks simply because that's where all the drama is. And let's see, starting with HDFC Bank. So not in any particular order, by the way. It's not my favorite or anything. So HDFC Bank weekly chart clearly, right, clearly weak and potentially needs to go down to 1120. So I wouldn't be in too much of a hurry to buy it. Actually, selling has increased in the last 2 days. Wouldn't short it either, because I don't think the risk reward is really good. Could come to 1100 or could go up to 1250 and all. But let it come to 1100 and then maybe it would be a buy at that time. But if you have to short this. Okay? I mean, if you have to take a position, it's a short. Stop loss at around 1210 with a target of 1120 first and then 1100. ICICI Bank, hope you're seeing ICICI Bank at your end, has broken that uptrend channel and sitting again on near some good support. So non-committal would not like to jump into this. By the way, I mean, these are some of the stocks which are quite liquid on the FNO side, and you should perhaps be looking at options data to see if there's anything we can gather from that in terms of getting a sense of where it may go. As we all know, those of you are in the FNO course now or have done FNO earlier or are trading options, these are worth tracking on the option side to see which strike prices are active, which are not, and then to get a sense of where it could be, especially since expiry is over yesterday. So there's a clear 4.5 weeks ahead of us now. Okay. Kotak Bank, that's so looks up. Every private sector bank not strong at all. This one is, just barely latching on to the 200-day moving average, and will probably break down to 720. Would have resistance at around 770, and then break down to 720 after that. Axis Bank has already broken down and looks like it may be forming a base. Weekly chart of Axis Bank a little cluttered, too many lines, I know that. Okay, just hold it there to get familiar with it. Okay, around 450 could be some support. Let it come there. There's no rush to actually get in something that is iffy. Okay, IndusInd Bank has started its fall perhaps. Mm. Mm. Notice one thing here in IndusInd Bank is the weekly chart. As it was going up, this was in July or September, the volumes were tapering off, and while it's going down now, the volumes are clearly increasing. So this is clearly selling that's going on. You don't want to be buying into this. As a matter of fact,
But
this is a
we
good
can see
one.
negative divergence also, right? Just before the fall.
Yes, before that there was definitely negative divergence there, right? The only thing about this, some of these, it's like we discussed these in like 5-10 minutes or 30 seconds, 2 minutes in the class or in the IMR. But please note the duration of the divergence from May of this year to August. So what, 4 or 5 months, and then still didn't fall for another 3 months and only fell now. So requires some of the divergences and some of these patterns really require you to have a lot of patience and understanding of the time factor to see what is really possible or not possible. Okay, so this is IndusInd is you've got a sort of bullish engulfing, but look at the volume, really bad volume. Okay. If it goes up, use this to short around 1100, 1120. You should short it with a stop loss at around 1140. I think it will go to 1000, and only then maybe some buying, longer term buying can be looked at. Yes Bank, sort of similar picture. Okay. It's a very long term uptrend, not very long term, sorry. Let me get it. Yeah. So it's uptrend from March of this year was clearly broken, as you can see, and I would think further downside is to be expected. Good stop loss for a short around 1210. Once it breaks 1090, then 1000, and maybe even 950, 800 we'll review. But I think further downsides are to be seen in Yes Bank. Kotak Bank, wow, this is a really big window here. Right, not closed. 100 rupees psychological support. Could I'm saying could very carefully and very hesitatingly, given the odds if this was a one-off stock, I mean, there is bullish divergence here. Okay, right, all right. Some bullish divergence is there on the MACD also. And when will it settle down? Don't know. The only issue with this is, the bulk of the private sector banks are going down, and would you want to buy this odd man out is the issue. Unless there's some other, so if you're doing it purely technically, yeah, you could. I mean, this is like, you can see its range bound since 2008, 2009 to now. And actually, really good support is around 80 bucks. And will it come there? I think there's a good possibility that it could, or if not 80, 90, that would be a much better buy price, of course. But in the longer term, it really is a question of whether it can break out of 180, 80 to 180 or not, and then the next move. Otherwise, this is a really good 8-9 year consolidation that's been going on. Okay, all right, I'm going to move on to the public sector banks, and you should be able to see State Bank of India on your chart now. And this is just to put a perspective on this massive double top. So this is October of 2010, and this is 2015. So 5-year double top went from 150 to 280 in this year. And then there was all this, these green candles. This was all about after Trump and demonetization. This talk about, okay, these banks are going to now have a lot of money, lending rates will come down. And SBI did cut bulk deposit rates, but still it will come down and profitable and all those things. But I'm not sure if some news happened on this day, 21st, 3-4 days back. If anyone knows anything. They just cracked, and nothing on the volumes. So generally weakness in the overall market perhaps, and just going down with that. So this has gone to 285, now broken down, taking support at the 50-day moving average. And this could be, and sort of downtrend flag. All right. And once it breaks down, say from 280 to 260, another 20 rupees down, 260, 2240. So somewhere here, there where the cursor is, and that's really near that support, that blue line, support line. So I think 240 is coming. You could even short this tomorrow rather on Monday. Stop loss of around 270, 272, and first target 250 or 252, and then 245, 240. Okay. Pretty good in terms of risk reward, I would say. PNB, similar picture, except that I think there's a much better resistance involved here. Short at 146, 147 as your stop loss. First target 130, and then 125, 124. Little might be high risk because it's coming down on low volumes. Actually, I take that back. So no shorting of this one at least. Could actually shoot up. As a matter of fact, after looking at the volumes, stick my neck out and say maybe even buy with a stop loss below 132. And once it clears 150, then you should see 160 quite quickly on the PNB. Okay, so I'm just going to quickly for myself go through the bunch of now once you get a flavor for especially SBI, PNB, almost all the other, public sector bank stocks are more or less copycat. Really nothing to say. Just scan them quickly and tell you if there's anything. Okay, so Indian Overseas Bank is looking interesting. And the reason I'm saying that is because of this hammer, and that's on a pretty good one on a weekly chart. It's not a compelling buy. It could actually, it's at 25 now, the price. It could even go to 20 and just crack, but I don't think it will go much below that. Okay. It's well, a high risk buy at this point, but it could really, you never know. This stock was 200 rupees. It's at 25. It's like almost lost 90% of its value or price rather. But it could also be one of the best prices you've seen on this stock, and you'll know this only like 1 year, 2 years, 5 years later. This is like a 2003 level it's come to after 13 years, and it's formed a pretty good base for now. This tentative double bottom, right? So this is one in Feb this year, 2016, that red candle, and this one here could go to 20 if that's a risk you're willing to take. Right? Could be a place to buy, or definitely put an alert on this 23, 22, 21. As it comes lower, 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 definitely think about buying it. Could just be a good buy. Okay, and I think that's it as far as there was one more. Sorry. Okay. Bank of India, and yeah, so look at Bank of India. Now, what's very interesting about Bank of India is the fantastic rise in volume. Just look at how the volumes have shifted from 2007 to 2000, mid 2009 there was this volume, and then from 2010 to 2013 there was a lot of just participants left and interest was lost, and then like late 2013 onwards there's been a massive increase in volume. Yeah, 1 to 3 years. This is what selling. Overall, it looks like accumulation to me. There is that right OBV, PVT, and all that. I, hmm, definitely, these are all indicators, volume-based indicators, price, volume, trend, and on-balance volume. But looking like this could go up weekly. So coming to shorter term, the key is for it to break 120, 122. Okay, so it's consolidated for like 3-4 months. May not really go up suddenly. Okay, it could go to 127 again, come down, 130, come down. Could go to 100. So you'll have to live with that. But once it breaks that 140, 150 mark, 180 is something that you'll probably see on it. very quickly, right? So I think that is what we can expect as far as Bank of India is concerned. It's going to be a longer term patient play and lot of resistance zones right on top. So that's a mess. It just frustrates the move. But once it's through, it could perhaps just go up like a rocket. So don't forget that. All right. So interesting. We have some buys in public sector banks. A high risk tentative buy in Karnataka Bank, private sector banks, and all the other private sector banks are more or less short. And even SBI would perhaps be on the short side. Okay. Done. So I think with that, I'd really like to stop now because we've covered quite a bit. I mean, there's plenty of opportunity at IT. We saw in Realty, and you can do more. The question, I mean, you can do more, start chart studies, find more opportunities. But I think to keep it practical and short, how much money does anyone have free to invest, and how do you want to go about allocating that capital in the opportunities that you find? Right? That really is the moot point, and that's something for everyone to think about. But having said that, for those of us who like longs, I think IT is the space to be for the coming days and weeks for sure. For those of us who are looking at charts, definitely there is something in the banking space. Right? If I remember, not if I do remember that the private sector banking fundamentals were really expensive. And with all the thing about banking is that there's so much mixed opinion right now. You have the demonetization, you have a potential interest rate cut, but you have demand in the economy for people to buy stocks, I mean, to borrow money. And if you look at it across the board, right from shampoos to cars, the demand has dropped significantly. And with all the, what do you say, dance that is happening with the government and demonetization and RBI, it hurts the confidence of the common man and the citizen. And even assuming tomorrow everything went back to normal in terms of you can withdraw your money, there's nothing. And even if, let's say, they withdrew or rolled back all this demonetization, I think the confidence is strongly shaken in the economy. And we're going to definitely see more adverse effects in the days and weeks to come, is my opinion. So anyhow, the reason I was saying all that is because on the bank side, there are two different plays going on right now. Lower interest rates, perhaps an RBI cut of even 0.5%, so makes money cheaper, but is there demand in the economy for that, right? For taking up loans as there was. So that's something that will pan out. We'll track that and see. So that's it for today. Thank you for attending. The recordings for both should be up by tomorrow, hopefully, maybe today. I'll try. I'll send out the links and do send in your feedback as usual. And for those of us who are in the FNO course, please do remember to go through your homework. And in the stocks that we discussed today, almost all of them, not almost all of them are in the FNO space, and both on the IT side and on the banking side, there should be a lot of good options data that you could look at. So if you do that between now and tomorrow evening's class, then maybe we can do some practical analysis. And if there are any questions you have, linking what we discussed here with the options data, then that will make for some very practical, deeper insights into the market. Right? So with that, closing the session today. Thank you very much. Have a great weekend, and we will catch up again next Friday. See you, and hope you make money. Bye.